Hi, this is Brent with Trade Therapy, and welcome back to the Trading Couch. This week's Clarity Spotlight was on Tesla. We're going to look at the three charts that best explain why this is a pivotal moment in the institutional cycle. We'll start with the monthly chart to understand the bigger context, then use TSLL to see how leveraged products confirm absorption, and finally refine our view with a daily chart of Tesla. This is the Tesla monthly chart. This is what a true change of character candle looks like. We're on pace for an all-time high monthly close with widespread candles on high volumes. That tells us this isn't a cosmetic rally, it's structural. Supply from the last cycle has been absorbed, and institutions are reasserting its leadership. Notice how Tesla briefly fell back into a Wyckoff creek here, but defended it on strength. That reversal wasn't luck. That's Tesla reestablishing itself as a leader. Wall Street used that dip to trap weak hands, reload inventory, and flipped out into confirmation. The moving averages confirmed that shift. The 21 and the 55 exponential moving averages on a weekly basis have also turned positive for the first time in this campaign. That alignment says sponsorship in the short term. It isn't a question, it's conviction for the next leg up. So for those of us that study it, this is the moment Livermore and Wyckoff really stressed. You don't pyramid into hope, you pyramid when demand has clearly overtaken supply. And the longer term chart here confirms that. If we jump over to the TSLL daily chart, the leveraged product, we can see volume surged at the summer lows, but instead of collapsing, price stabilized. And that shows absorption, not distribution. Institutions were defending here, making sure that shorts couldn't get any traction. Then we see a continuation of that defense. TSLL has now since broken through its daily EMAs and has held trend with conviction. When a leveraged ETF mirrors the underlying asset this cleanly, it tells us institutions are pacing both products deliberately. If Tesla were left alone, TSLL would show a bunch of volatility, bunch of failed breakouts, and just general disorder. Instead, it's controlled. One more thing to note, the 618 level right around here, 20, that's a technical pivot, a liquidity trap. Institutions often target fib retracement zones because that's where retail stop orders and breakout entries have a tendency to cluster. So defending and breaking that level on volume, it shows they're not avoiding liquidity, they're absorbing it to scale exposure. This is why we pay attention to TSLL. It's a truth teller. Sponsorship and leverage confirms sponsorship in the underlying. If we jump over to finally the Tesla daily chart, we see the moving averages are now stacked bullishly. The 5, the 9, the 21 EMAs are all beneath price. The 30-day simple moving average is also being used as a midterm base. Institutions don't let this kind of alignment happen by chance. Every one of these pullbacks has been defended. Every breakout has been paced. There's no distribution volume anywhere, no heavy clusters on down days, no divergence undermining the move. Even the 618 retracement at 356 remains an optional demand zone rather than a likely one. The tape's very clean. For disciplined traders, this is exactly the environment where pyramiding begins to make sense. Breakouts are being sponsored, pullbacks are defended, and demand is clearly in control. The job here is not to chase candles, but to recognize the setup and size appropriately when institutions are pressing into leadership. And that's what we're doing with our positions and our exposures for Tesla. To wrap this up, the monthly chart shows the change of character at cycle highs. TSLL confirms that absorption has taken place in leverage with fib levels defended and volume sponsorship quite clear. And then on the daily chart of Tesla, we see it showing exactly what disciplined markup looks like. Stacked averages, clean sponsorship, no distribution in sight. This is why our Clarity Spotlight framed Tesla as the centerpiece of the current cycle. It's not just participating, it's beginning to lead. And understanding when to scale in during confirmed markup is the lesson that legendary traders built fortunes on. If you'd like the full write-up, including our top-down analysis for SPY through consumer discretionary, ARKQ, DRIV, Amazon, you can find it in this week's Clarity. That's all the time we've got for Tesla this week. We'll see you next week.